Chinese yuan, the euro, Hong Kong dollar, Australian dollar, but lots of other currencies, no US dollar. This was really eye-opening to me. Nobody can take us down. How flippin' arrogant is that? What does that do for you and me? It puts us in jeopardy.
Discover the latest developments on the US CBDC alongside Lynette Zang as we navigate from its promising advanced pilot program to the disruptive impact of FTX and Silicon Valley Bank. With the BIS raising concerns about the US lagging behind, it's crucial to understand the implications for both the USD and your financial landscape. So, don't go anywhere and keep watching Lynette Zang till the end of this video.
First of all, this was the most recent one, implications of a US CBDC. Now, you just saw what's happening in the world. Let's talk about what's happening in the US. So a US CBDC for international payments, and what's the role of the dollar? So this is from the Federal Reserve. As a liability of the central bank money, that's this garbage, is the most trusted and safest form of money as it presents no credit or liquidity risk. Now, why does it present no credit or liquidity risk? Because they can print as much of this stuff as they want to. So can they pay you what they owe you? Sure. Of course, every time they do that, the value of this stuff continues to go down. But that's what we're saying. Central bank money. They can create as much money as they want to. No credit or liquidity risk. As a potentially new form of central bank money, a US CBDC, central bank digital currency, could affect the international role of the dollar and the role of US payment systems in cross-border payments. And remember, the US controls SWIFT, which is the global payment system. But is this part of the shift away from the US dollar as the world reserve currency? Yes, this shift is not a new shift. It's actually been happening since the euro came out in '99. But here from the Bank for International Settlements, which is the central banker's central bank, is the report on a blueprint for the future monetary system. Yeah, improving the old, that means more and more control, and enabling the new, where you can't get out of the system, unless, my friends, you are already out of the system. Okay. Here are the key takeaways. First of all, tokenization of money and assets has great potential. And we've been talking a lot about tokenization. I first started talking about that back in 2015. But initiatives to date have taken place in silos without access to central bank money and the foundation of trust it provides. You have to understand, I'm going to read this with tongue in cheek because I have no confidence or trust in these central bankers, and I don't think anybody really should. But tokenization, like everything, there's good and there's bad. You're going to be presented with just the good, but you got to look at it both ways because it's good and bad for everybody as long as they understand it and can take advantage of it. A new type of financial market infrastructure, a unified ledger. This is the piece that scares the crap out of me. Could capture the full benefits of tokenization by combining central bank money, tokenized deposits, and tokenized assets on a programmable platform. Shall I read that again? Because it combines central bank money, the ability for the central bankers to do this, create as much as they want, tokenized deposits and tokenized assets. Guess what? This is an asset. The goal is for you to hold all of your equity on your cell phone, making it so much easier for you to spend as they use perception management, which is a formal program of the central bankers and the governments, to nudge you in the direction they want you to go, okay? This is a bird's eye view of the Bank for International Settlements, the BIZ Innovation Hubs, and their project on CBDCs and tokenizations, okay? So there's the BIZ Center, Switzerland, and what I really want to point out is where's the dollar in all of this? It doesn't really matter what these titles are. Where is the US dollar? I don't see it. I don't see that the US is participating anywhere. I see Switzerland, I see Hong Kong, I see Singapore, I see lots of others, but I don't see the US. Where is the Fed in helping craft what we're looking at here, the future of money? And what are the relevant currencies in this experiment? They're the Chinese yuan, the euro, Hong Kong dollar, Australian dollar, but lots of other currencies, no US dollar. This was really eye-opening to me. This will be a year of divergence between the world's major central banks. The source of this division won't be interest rates or quantitative easing. It will be technology. It will be the development of the central bank digital currencies. Over the past 12 months, some of the largest central banks in the world have all made significant strides forward in their development of central bank digital currencies and fast payment systems, which the Fed now, that's a fast payment system. But let's see, who are these major central banks? The European Central Bank, the Bank of England, the Bank of Japan, the Reserve Bank of India, and the People's Bank of China. Where is the Fed? So if the Fed, as the world reserve currency, and remember what that means, it's not true anymore. And we've been watching this and talking about it. But what that means and what it did mean is that if you were leaving your borders, you were going to a different country, whether you're a government, corporation, or individual, and you wanted to buy stuff, oil, lumber, medicine, whatever it is, you had no other choice but to do it with dollars. There was a false market created for dollars, which was really of a benefit to us here in the U.S. And not so much of a benefit to anybody outside of the U.S., but we've been losing that benefit. Are you prepared for it? Because we're going to be talking more about this. But there are new alternative financial plumbing systems, including China's own version, expanding all over the world. Think of these systems like pipes being built. Now, right now, I want to point out to you, because this is a big potential problem, which they've been getting into place to solve for themselves, not for you, puts you in jeopardy. But right now, the money market funds that people think of as savings accounts are the plumbing to the global financial system. So they are replacing the plumbing. When do things get too expensive? When enough risk has been transferred from the few to the many. Then it gets too expensive to print all of this money and bail entities out, meaning you and me, not the bigger ones. But the pipes take a long time to construct. But once that water is turned on, change happens very quickly. Do you get that? Change happens very quickly. The apparent belief of some inside the Fed and on Capitol Hill is that the dollar does not need to innovate. That is a miscalculation. I could not agree with them more, because we are being left in the dust. And I thought that not only were we keeping up, but that we would remain ahead. And that is not what's happening. That is not what's happening. So if these cross-border systems are built without the United States and the dollar, the way the dollar is used in trade, reserves, and especially sanctions enforcement could shift significantly. Can you see the power shift away from the U.S.? And who else was in there? Oh, China, right? We're going to the East. This is significant. So what are the conclusions from the Federal Reserve report? Let's go back to that, okay? Although a CBDC is unlikely to harm the international role of the dollar or worsen cross-border payments, that's garbage. Because after all, we're king dollar. Yes, it has no purchasing power value, but we're king dollar. Yeah, I don't think so. Although a CBDC is unlikely to harm the international role of the dollar or worsen cross-border payments, the improvements that could come from a CBDC would also be realized by improvements to non-CBDC payment systems that are already underway. So what are they really saying here? Yeah, we're king dollar. Nobody can take us down. How flippin' arrogant is that? What does that do for you and me? It puts us in jeopardy. By 2023, the US dollar share had fallen to 59%. Yeah, there is some potential for the erosion of the US dollar's role as a medium of exchange. Yeah, well, guess what? It's already happening. Do they not look at their own data? No. They have rose-colored glasses and they see what they want to see, or they see it, but it plays into the real plan. But what I can tell you is that they're moving ferociously in the direction of tokenization and taking everything digital and making even the cash. I mean, the problem for central bankers with cash is that it creates a zero interest rate policy. That's debt.
As we conclude this exploration into the future of the US CBDC, we invite you to engage further with our community. Don't forget to hit that like button, share this video with fellow enthusiasts, and subscribe for more invaluable insights from Lynette Zang. Together, let's stay informed, empowered, and ahead of the game. Until next time, may your investments flourish and your curiosity never wane. See you soon.